May profits be upon you. I hope you're enjoying your weekend. I hope last week you caught some of those big moves. All right. A couple of things that we're eyeing that are very important. I'm going to talk about right off the top. Okay. What was in my coffee? We have the French elections coming up tomorrow, and that's going to have a big impact on the euro. If Macron wins, in my opinion, likely we'll see a gap up on the euro futures. If Le Pen wins, we'll probably see a gap down. We're gonna, but we'll go into it just a little bit more. Let's just take a look at the RT money strength meter. All right. Let's look at the rankings. The rankings 1 through 8. All right. We have the US dollar at the #1 spot. And it's been strong, as you can see on this, the Dixie, the Dixie index, the dollar index here. All right, now it's weighted against a basket of other, US dollar weighted against a basket of other currencies. But this is a great way to gauge US dollar strength. And you can see it's been very bullish, especially after this period of consolidation here that ended and was broken on at the beginning of the month, and just continued bullish since then. All right, but you can see also on here the Aussie. Now it's neutral at the moment, but where was it? A week ago, it was at 1.99. All right, that was strong enough to put against the weaker pairs where you can take some high probability trades, right? Prior to that, it was at 3.27. I mean, this was very strong. You see that it has gotten weaker over the last few weeks, okay? And that's something to note, all right? Also, the CAD was stronger. It got weaker. All right, a little bit weaker from last week to week. It's been kind of on the neutral side, but you see a couple of weeks ago, it was pretty strong. All right, New Zealand dollar seeing the same thing, as the same decline as the Aussie. All right, and the Swiss kind of banging neutral, but it's been weak. It's been weak for a while now. All right, and few weeks ago, it was at -141. Then it really dropped off in strength. All right, the Swiss. All right, pound and euro. Now, these have been weak and have gotten weaker. Look at the euro, 390, -481 to -5. All right, I mean that's a pretty precipitous drop. Look at the euro. I mean, look at a pound, -27 a couple of weeks ago. -338 last week, and -567. Down she goes. Now the euro is something that we need to be paying quite a bit of attention on. We're going to have to be very careful putting this against the stronger currencies because of the Macron Le Pen situation with the French in their elections tomorrow. Again, we're likely to see a bump up if Macron wins in euro strength. All right, so you want to be careful when putting that against stronger currencies, because you may see a struggle to get higher in those currencies. All right, I would put it against the US dollar. All right, that's the safest one because it's so much more stronger. Okay, but this is going to be one to watch. This is one to be careful of. I'm looking to go hard trading with the strength of the US dollar against Aussie, against New Zealand dollar, against the pound. All right, but I'm going to be very careful when it comes to the euro because of the news. All right. The yen, finally we get to yen. You see how, I mean, it's just been a bottom, been at bottoms for a good while now. This is why I'm very cautious about it. All right. You've seen a little, we'll see it on the futures chart, but the yen is poised to bounce. All right. And now we understand it's structured to the downside, and you can see it's been sliding further and further into the abyss. All right. But we know that on any chart, any oscillator will tell you this is way oversold, and poised for a snapback, and it could snap back at any time. All right. And the deal is, you, you have to be really careful with continuing with business as usual against, or trading against the yen because of that fact that it's been oversold for so long, and it could bounce. Might be one to avoid this week, trading its weakness, but it's structured bearish. I'm overall bearish with it, but we'll take a closer look on the individual currency futures charts. Look at the Dixie. Obviously, this is on the daily. Oh, I forgot to mention, the RT money meter is based on the rate of change over 15 weeks. Over 15 weeks, we take a snapshot and we gauge that rate of change. That rate of change, and these numbers reflect that rate of change over 15 weeks. You understand? And then I rank them in order so that I can say, okay, I want to put the strongest against the weakest. I like to take the top two against the bottom two, that kind of thing. But look when it's -2 or less, that's really weak. And those are the ones that you want to take against the +2 or more. The stronger ones, those are the ones you want to take for the higher probability trades. The ones in the middle where it's neutral and stuff like that, there you got to be a little more careful with, right? Okay, let's look at the Dixie. The Dixie, man, this is very strong. You can see the breakout here. I'm going to start making some marks. You can see the breakout here, right? And it's been strong since. And where do I think it's going? All right, let's bear in mind something. The stock markets, the indices, the S&P, I'm talking specifically for me, I'm talking specifically about the S&P, the Dow, and the NASDAQ. We're going to take a look at those charts, and you can see things are looking down. All right, we're hitting areas where once it gets past, it's looking like this now on the indices, right? We're breaking strong structure, strong support, and heading down to low, the bigger, higher time frame macro level lows. All right, when we're hitting here, all right, you're going to be expecting, especially if it's oversold, if it's an overextended market, which is more accurate to apply, more apropos to apply to Forex markets, as opposed to being overbought and oversold, and not overbought or oversold, but overextended. Yeah, overextended. That means it's poised to snap. All right, and you can see that on the S&P, on the Russell or whatever, they're sliding low, and it looks like more than just a market correction. It looks like we may be on the verge of, it looks like a verge on a crash. So just look at how things went last week on the market. So what does that mean for the dollar? Of course, the reason why it's heading that way is because the dollar is gaining strength. And this brings us to an interesting area where we start to think about inflation and deflation. What is happening? What are the yields, and what are we? These things can be a little complex. A little, I used to just look at what does the technicals tell me. No, man, I can't just do that anymore. I have to keep in mind what the fundamentals might be. All right. High impact fundamentals. I'm talking about news that tend to reverse markets. All right. Not the more nuanced stuff. Oh, the CPI and the this and the that and the whatever. No, no, but high impact stuff like market crashes. You know, when you start to see precipitous rise in the USD, then you know the market, the indices are heading the other way. And then you have to look at gold, you know, in relation to the USD heading up. What is gold doing? If gold is heading up at the same time, I start to go get the heebie-jeebies. All right, because then they're not supposed to be positively correlated. All right. And when you start to see gold start heading down, you start to see the indices start heading down, you see US dollar heading up, your antenna should be up. Your antenna should shoot up, and you should be like, oh, wait a minute now, wait, whoa. You know what I'm saying? Anyway, let me get back to the technicals. Dollar's going up. All right. I think this is going to keep heading up. Look where we're heading at. Look where we're heading to now. Okay. If I put it on the weekly, we can see that this peak here that happened in March of 2020, we're heading up to that. We're heading to that. We broke these highs here just during last week, and I believe that exposes us to 102, a psychological level, 000. The 102 level is I think going to be the next target for the week ahead. Okay, let's go to the next one. Spent a lot of time on that one. This is the euro. Again, what did I say? I mean, it's the inverse of the Dixie. All right, just heading down. Where are we heading at? Strong support, right? And if I'm going to look at this, we're looking at this objectively, this area here, all right, using that is going to be of interest to me. Why? Because I think there's a lot of demand in that little area. All right, a lot of demand in that area. And reason why I would say that is because from this demand, we broke these highs. We swept all kinds of liquidity once price came to this level, and we came back, respected it, and continued higher. All right. Now we are in this demand. Excuse me. We are all up in this demand here. All right, which we're crashing through. Come on, man. I gotta get my life together over here, man. Serious. All right. So we're feeding through this demand. When you start to see demand fail, all right, and I mean a close below this level, when you start to see demand fail, you know the order flow is bearish, all right? The order flow is bearish, and we're about through this area, all right? This would have been this is a signaling to me that there's more bearishness to come. All right, it's kind of a hint, an indication to me. All right, and that we're going to expose the markets are exposed to this area of demand down here. I believe we're going to take this low because this is a liquidity point or an inducement point to get people to take longs early, I believe. But I think the real objective is to reach this area of what do you call it? Area of demand. So let me go back to the daily, and this could happen soon. This could happen soon. This could happen over the weekend. I mean, or during the first few days of the week. Here's the deal now. Like I said, look, the election for the French is happening tomorrow. We have not closed below this zone, the demand zone yet. It has not failed as yet. All right, we get a close, and this looks poised to take that low. You know, uh, then we got a whole different conversation. Then we'll have a whole different conversation. I believe, you know, that it will fail, and we'll see. We'll see. But tomorrow, on Sunday, this thing could come right back up. Could find its way up. All right, take out this sell side liquidity here, and find its way up. If we get that, this is what again, this is, I always look for the same thing. We have this low. I'm looking for, if we break that low here, this is an if and, or the, you know, if it does this, then I'll do that. I'm looking for this high to be broken. Once that high is broken, then I'll be looking to take longs. I'll be taking longs with EU pairs. All right. Got it. I need this area broken. If price makes it back up here, comes back, I'm looking to take the order block left behind here, the area of demand, and I'll take that demand upside. All right. If Le Pen takes it, then I'm looking for this to get tagged. All right. Once we break this this zone here, I'm looking for price to come back up, and then quite possibly come back up. I hope we get a pullback, but that's where I'll be looking for after this is the reaction to this demand zone, which would be a broken demand zone. Wait for it to have a break and a close below, a pullback to the extreme of the reaction, and then we could take euro pairs for, you know, we'll trade against its weakness. Okay, so we'll see what happens after tomorrow. Let's go to the next one. All right, again, I'm looking at the futures, the individual currency strengths. All right, look at this pound. Why would I think anything about taking any longs against this longs with pound pairs? No way. I'm looking to play on its weakness. I really want to take one of these pound pairs especially against the US dollar. What am I doing? There was something in my coffee. All right, so only thing what we have to acknowledge is the breaks, the pullback, and then the following breaks. We're taking out lows and respecting highs all the way down. All right, that's all we have to notice. All right, where are we going to? Let's look over. All right, we have an interesting area here. Again, I'm not looking for reversals. I'm not looking for reversals. High probability trades are with the trend. I am pro trend. You understand? We hit here. I'm looking for a reaction. I'm looking for a reaction at the zone. Where are we at? About 127, 127.80, 127.80, 90. All right. Yeah, about that. Matter of fact, 127.84, 127.84. All right. Yeah, 127.80. All right. Price comes down here. That'd be great. But all I'm looking for on pound pairs is the possibility of a pullback, maybe to these lows, right? Because there is a supply there, a supply zone there. All right. But I'm looking for an excuse to take shorts. All right. That's it. I'm just looking for it. You want to take shorts against this pair. All right. And I already gave you what level I think it's going to reach. I'm going to put this for my own purposes here. Okay. Zip, 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 boom. All right. And if it comes back, great. If it just pulls back, when it has a lot of momentum coming into coming down like that there, I don't look for a deep pullback. This one is doable. I don't look for a deep pullback. I look for a more shallow pullback when it's coming in hot. All right, so I'm looking for something like this, but in either case, any pullback will be an excuse for price to go down low. That's all I'm saying. Okay. Next, what is this? Canadian dollar. This one you want to be very careful with. All right. If you look on the money meter, it's kind of on the neutral side, even though it's getting weaker. But I would only put this against the most weakest pairs like pound and euro. And with euro, again, I would wait until after the election. But by itself, it is very weak. All right. It's been buoyed for the last couple of weeks because oil was strong. All right. I don't think that's going to happen next week because you've seen the weakness in the markets. If the markets are starting to go down, you're going to see people not put money into oil, and you're going to see that reflected in the Canadian dollar as well. You can see it's on its own, it's weak. So this is not one of the best ones to be messing around with. All right. Again, you see how the momentum coming down is, right? What I would mark out is the possible places it could pull back to, and this is the buying before the sell starts, the aggressive selling starts, and this is if it does pull back, this is where I would take it. You know, I would take more shorts with the Canadian dollar, but I'm not messing with it, man. I'm telling you right now, I'm not going to mess with it. We might see a pullback because of what's happening over here. All right, this looks like a zone that price could quite possibly find, you know, a reason to snap back. I'm looking at this right here. All right, and that would be a demand zone. All right, and where are we at here? Where are we at here? Let me see. That would be at 0.7824, 78.24, right? This would be the target. Any pullback, you think about taking shorts with Canadian dollar pairs. All right, but this one is not the favored one. If you're going to take shorts, take it with against the pound, take it against NZD. Okay, take it against the New Zealand dollar, take it against the Aussie dollar. But there are other ones to take. Okay, those are my recommendations anyway. Let's go to yen again. We see how weak this is. This is no surprise. We would have to go to the weekly time frame, and you can see we're past a high time frame low. All right, we broke that structure. Come on, man. What? Something not in the coffee. All right, so we broke that structure, high time frame, right? And we're just plummeting. You know, where are we heading? Here's where we're heading. All right, let's take a closer look here. What is exposed here? We come back up, we start to sell off, and then we start buying up there. We start to see volume and momentum into the market. So I'm looking at this area here. All right, and I could very easily look at this area here. I could very easily look at this area here for demand, right? But I like the fact that it came up here. All right, so I'm looking at this whole zone. I'm going to look at this whole zone. All right, we could refine down to this area. We certainly could, because this is the point at which you saw price start to break and take liquidity all the way up. All right, but again, I like to look at the beginning of a zone because I've seen it come down here and then bounce off and everything. And look where the price is right now. We're right here. We're here now. We're here now, touching off. All right. What am I going to look out for? The reversal, the reverse pattern. That's the same pattern I look for every time on every time frame because price is fractal. Okay. We start seeing this where you see a low, a pullback, a lower low, an impulse high that breaks that pullback, and then it'll pull back into a return to impulse or a return to origin that starts the new bullish leg up. All right, I'm looking for that over here, okay, in this area. So that's on the weekly. It might take a while to get there. All right, we are bearish. So just be careful. It's not going to be as business as usual because this area is way overextended. After a break of structure, how many structures have we broken on the way down there? After a break of structure, what do you expect? A return to impulse. At some time, we're going to have that turnaround. We're going to have it. And this is a higher time frame, macro level zone of demand. I'm looking for that to happen here. All right. So yeah, that's it. What am I doing here? Anyway, so if we go back to the daily, I'm looking for signs of strength here. I'm looking for signs of strength here. And that may be coming. That may be coming at some point, but it may take a while. I'm not saying, don't take any shorts with against the yen. I'm saying be careful, just like I said last week, but just be careful with it. That's all I'm saying. Okay. The Bank of Japan is willing to keep their yen, their currency devalued, because if they allow it to get past this that magic point of for their yields, all right, they're going to be buying bonds to protect the rise, the value of the yen from passing that point where their yields start to affect the rest of their financial markets. All right, it could have a huge negative impact if the yields surpass that level that they're trying to protect against. So they're going to buy the bonds necessary to keep the price of the currency strength down. And you just have to be careful with situations like that. The Swiss know all about that. Okay, let's move on. Aussie dollar. Only thing I'm looking at is weakness. Okay, that's all I'm looking at. All right, the Aussie dollar. Yeah, it's one of the stronger ones, bullish neutral. All right, but it's on a slide, man. It's on a slide, like I mentioned earlier, sliding down. Okay, what do I expect to see? Let's look at this. All right, as far as strength goes, it's very bearish. Look at that momentum. Here we are. All right, do I expect a turn here? Well, I'm gonna tell you what. You see how this is an important pivot point? This is the pullback that is responsible for making that high, breaking structures. This is a strong low. All right, I'm looking for a reaction here. Absolutely. All right. However, I'm not looking for a reversal. I'm looking for a reaction. All right. Prices got momentum to the downside for a good reason. Okay. So this is why I want to take Aussie dollar combinations. All right. I definitely want to take those short. Against the US dollar, this is very weak because it's weak on its own. Do you understand? I'm hoping that I'm explaining this right. So any pullback, even up to the previous low, any pullback whatsoever, I'm going to be looking to you want to be looking to take shorts against this pair. All right. I don't know if we're going to crash through this thing, but it looks like we are, because it looks very heavy. There's a lot of momentum going into this level of demand. All right. So I'm taking my time to explain this stuff, and I'm hoping that you're catching what I'm putting down. If you're digging what if you're picking it up, if you're picking it up, man, let me know. If you're not, if I sound like I don't know what I'm talking about, it sounds confused or something like that, hey, I'm sorry. I'll do a better job on the next one. Okay. All right. But I'm looking for more weakness in Aussie. All right, New Zealand dollar, same deal. You can see it's the same deal. We just broke that low, broke this pivotal low for sell side liquidity, and we have other sell side. What am I doing? We have other what do you call this? Internal liquidity here to take, and we're coming for that low for sure. I believe we're coming for that low. All right, and if you're going to look for a pullback. What am I doing, man? I'm picking the wrong stuff. I'm looking for a pullback, maybe to these lows, maybe to those lows. But I'm looking, if any pullback, I'm looking for shorts. All right. I'm just looking for shorts. I'm not looking for longs against, I'm not looking for longs with the strength of the New Zealand dollar. I'm looking for shorts. I'm looking to short against this. All right, especially with the dollar pair, with the pairing it against the dollar, New Zealand dollar. I'm looking for shorts. You understand? I'm looking for shorts. So if it comes up, fine. If it touches that, that'd be even better. That'd be even better. But if it just continues bearish, that's when I'm looking for that bearishness to continue. Do you understand? I hope so. I don't think we'll get a big reversal here. This is a strong low because it broke these highs, right? Grabbed a lot of liquidity on the way to getting up there. All right, but this pattern, this swing low to that swing high was broken, which indicates more bearishness to come. Okay, does that make sense? I hope it does. Make sure you leave a comment in the comment section. Let me know if what I'm saying sounds like it makes sense. If I sound like a crazy man, I need to know, man, because I'll change. I swear I'll change. My ex-girlfriend didn't believe me either. Okay, so we're going to move on to the last one, and this would be Asia. Asia. Why am I saying Asia? The Swiss franc. The Swiss franc, man. The Swiss franc futures, they are so weak. On its own, it's weak. This was a beautiful, beautiful head and shoulder situation that played out well, broke the neckline and everything, just came down nice, right? Do I want to take Swiss pairs? Well, look how weak it's been. Minus 396 the week before, minus 326 the week before. Hey, where you going? All right, the week before, minus 141. It's been heading down. All right, but I'm not exactly hot on Swiss pairs. You know, to be honest with you, I think there's going to be better pairs to take, because if the markets start to crash, I don't think I don't want to be in a Swiss pair. All right. I'm still trying to understand all the fundamentals that come into play, but this looks very bearish, and there are stronger pairs to take. This is, there are stronger pairs to take. I'm looking at euro, I'm looking at yen, I'm looking at the precipitous drop of the Aussie and New Zealand pairs. The Swiss, you take the pairs if you like to against the US dollar. It's been pretty weak. And if you're looking for a pullback here, I want to see where this is going, to be honest with you. We just filled the gap here, and we have this area here. All right, this looks like turnaround city, to be honest with you. Like my British friend likes to say, to be fair. All right, so we also have a demand right here. So, but this is where we can see price started to gain a lot of momentum. All right, but this is the origin of this move. So if price continues down, and I believe it may to 1.038, any pullback, especially in this area here, because you can see the activity level around here, right? You can see that activity level around here. You can expect some kind of reaction to stay bearish, but we may see we'll see how things develop with the Swiss. I just think there are better pairs to trade. All right, this video is going a little longer than I would like. I want to stop it here. What I'm going to do is I'm going to put out my video for my favorites list, and I'm hoping that you can appreciate it, and that'll be Aussie dollar, New Zealand dollar, pound dollar. I'm looking to short those, right? And then we'll take a quick look at the indices, and yeah, I'll leave it there. You know what I mean? See what else pops up during the week or whatever. But I'm going to be putting those videos out today. Okay, I will see you in the next video. Thank you for spending some time with me. Hey, up until the end of April, we got one more week left. Lions Den Effects is free to join for at least the remaining week. At the end of the week, we'll give you a choice to come to look at a pay schedule, pay the fee schedule for a private Discord where you catch the signals that are given out by a drunken monkey. They are on fire. He does them daily, multiple singles a day in different markets. And you also get the benefit of my analysis and trade ideas that I give daily. I'm always in the chat, throwing out ideas. And also, if you're interested in funding, take a look at the link in my description. You'll see the areas where I can be contacted, and a link, an affiliate link for Disrupt Financial if you're looking to get funded. And I will see you in the next video. Thank you.